because that is certainly in flux. 1.58% is the yield on the 10-year Treasury. It was 1.74% this time yesterday. That is an enormous decline in the yield on the 10-year Treasury. That means an enormous run-up in the price. What does that indicate? Jeff Sica first.
Well, of course, you have this big flight to safety right now, and I think
that's it, isn't it?
Yeah, I mean,
flight to safety.
It's a flight to safety, and the fact that investors are willing to accept these minuscule yields as opposed to taking the risk in other risk investments. If you look at gold is surging. And I think what's important to realize at this stage is if the Treasury market has more upside and continues to decline, it's still moving towards that negative yield range, you know, which ultimately could happen. So, I mean, there's a lot of implications to a flight to safety. I think at this point, you have to consider them all.
I'm just blown away by the idea that the United States should enter a negative interest rate situation like Germany, Europe, and Japan.
We've had, Fed Chair Janet Yellen to talk about it. Ben Bernanke has talked about it. Former Minneapolis Fed president has discussed it. It's on the radar screen.
Well, keep in mind, they have not ruled it out. And anytime anyone's asked them about it, they have not ruled it out. I think they're as desperate and as ridiculously stupid as you could be that they would in fact
David Malpass.
We should go farther. Look, the central banks are buying huge amounts of these long-term government bonds. So you have to realize that this is being caused. Remember, the Bank of Japan, the European Central Bank, and even the Fed is lengthening the duration of its bond holdings at a time when we're in a really high-priced environment for bonds. It doesn't make any sense, but it goes with the government. The government often is investing in the wrong things at the wrong time. Right now, this giant flow of money, $200 billion per month of central bank bond purchases at the very peak.
That's an enormous amount of money, $200 billion a month.
That adds Bank of Japan, ECB,
and
the
in the
Fed.
Eurozone, they're just buying German corporate bonds, right? I mean, that's the safe play. And that's picking winners and losers.
That's right.
John Layfield is still with us. He's just come from the